everyone, my name is Thivya Ganesan with metric number 278157. Today I am going to explain briefly about the summary on economic indicators during pandemic COVID-19 in Malaysia. In this summary, I am going to touch five main parts. First is introduction, second is the effect on economic before the COVID-19 pandemic, third is the effect on economic during the COVID-19 pandemic, fourth is the effect on economic after the COVID-19 pandemic, and fifth is the conclusion. Let me start with the introduction. The announcement of the first few hundreds of COVID-19 cases reached us in early 2020. Malaysia quickly decided to implement MCO 1.0, a strict lockdown that halted all non-essential business operation affecting SMEs, small to medium enterprises, and halting export production. SMEs account for 35% of Malaysia's GDP and 70% of all job opportunities in the country. Furthermore, Malaysia experienced several less resistive MCOs such as RMCO and CMCO in the months following MCO 1.0, but was forced to implement a strictly one in January 2021 due to an increase in infection cases. However, due to several restriction, MCO 2.0 did not have the same extreme effects as the first MCO. MCO 2.0 allowed most business, SMEs, and export manufacturers to remain open in order to help the economic recover. As a result, it lessens the impact on business owners, allowing them to earn money even during the lockdown. Regardless of this decision, business of SME struggled to stay afloat because they were still reeling from the effect of the first. Not to mention that many customers and investors are still active about the economic but prefer to save rather than spend, resulting in significant decrease in sales and profits. Let me summarize further about the effect on economy before the COVID-19 pandemic. Malaysia's economic growth was anticipated to normalize in 2018 following a strong growth in 2017. However, the economic faced a number of internal and external difficulties throughout the year. Significant legislative and political changes that were brought on in part by trade disputes on a global scale and Malaysia's historical change of government become source of economic concern. Unexpected supply disruption in the commodities industry had a negative impact on Malaysia's economic performance, causing growth to slow down more than anticipated. Therefore, let me prove this by discussing the data and findings. In Malaysia, the labour force expanded by 2.0% from 15 million people in 2017 to approximately 15.3 million people in 2018. Compared to 2017, when it was 68.0%, the labour force participation rate LFPR rose to 0.3% points to 68.3% in 2018. As a result, 37.7% of those who were working age were not in the labour force. On the other hand, the jobless rate dropped to 3.4% in 2017 to 3.3% in 2018. This demonstrates that the economy of the nation is still experiencing full employment, which is below 4.0. Female LFPR rose to 0.5% points to 55.2% in 2018. The participation of female in the market for the prime age 25 to 34 is 73.6% and 35 to 44 is 67.9% and 45 to 54 is 58.8% was higher as compared to female LFPR at the national level. The participation of male labour force was 80.4% in 2018 and then increased to 0.3% points as compared to the previous year. The LFPR for age group of 15 to 24 years recorded the highest increase of 1.2 percent points to 51.0%. Age group of 35 to 44 years also recorded an increase in 0.3 percent points to 97.7%. Overall, LFPR was still higher than female for all age groups. Second data and finding is about Malaysians' monthly external trade performance from 2012 to 2018. In Malaysia, the number of employed persons with tertiary education increased from 28.1% in 2017 to 28.6% in 2018 with difference of 0.5%. In addition, the number of employed persons with primary and secondary education declined from 13.5% in 2017 to 13.1% in 2018 and from 55.8% in 2017 to 55.6% in 2018 respectively. In 2018, the number of employed persons with no formal education increased to 0.1% points to 2.7% as against 2.6% in the previous year. Meanwhile, about 48.4% active unemployed persons secure employment in less than 3 months and 29.3% between 3 months to less than 6 months during the year of 2018. In 2018, 12.6% active unemployment person between 6 months to less than 1 year and 9.7% were active unemployment person in the period of more than 1 year. Largest trade surplus since 2012, exports reached almost RM1 million in 2018, supported by stronger than expected export growth. Malaysia's total trade in 2018 remained resilient, expanding by 5.9% to RM1.876 million compared with RM1.771 million in 2017. Despite the uncertainties in the global environment, export rose by 6.7% to reach a value of RM99.801 billion, surpassing the forecast export growth of 4.4% in the Economic Outlook 2019. E&E products, crude petroleum, metal, chemical and chemical products manufacture transports, equipment, and iron and steel goods were the main delivers of RM17.2 billion increase. The value of manufactured goods exported in 2018 increased by 9.1% or RM69.62 billion to RM835.48 billion. The third data finding is about consumer price index percentage change by main groups in Malaysia. On the other hand, we can also investigate the external sectors of the Malaysia economy in 2018 to the first quarter of 2019. RM15.0 billion was recorded as the current account balance, up from RM13.9 billion in the fourth quarter of 2017. The good account, which contributed the most of the current account surplus with a surplus of RM35.7 billion, narrowed to the services account deficit of RM5.8 billion. The United States, United Kingdom and Hong Kong contributed the majority of FDL, direct foreign investment DIA, increased to RM3.6 billion from RM1.3 billion in Q1 2018. The top destination for this investment were Indonesia, the Netherlands and India. The net outflow from portfolio investment increased from the RM2.6 billion documented in the quarter to RM38.3 billion. The massive outflow was caused by a net foreign sale off of RM29.2 billion in Malaysian debit instrument in the second quarter. Total asset increased from RM1683.0 billion in the second quarter to RM1698.9 million. This resulted in greater net liabilities as of the third quarter of 2018 of RM 112.2 billion. Bank Negara Malaysia's international reserve were worth for RM 4 to 6.9 billion as opposite to RM 4 to 3.3 billion in the previous quarter. Last but not least, the above chart shows the current account balance Q1 in 2017 to Q1 in 2019. Generally, the economic prospect of Malaysia in the pre-COVID stages are in slow growth. In contrast to the stage quarter of 2018, the lending index has predicted slower GDP growth for the second quarter of 2018. The lending index which predicts the path of economic 4 to 6 months in advance has already given reason to believe that Malaysia's GDP could expand more slowly in the third quarter 2018 and did in the first. Malaysia's economic growth was anticipated to normalize in 2018 following a strong growth in 2017. But the economic faced a number of challenges during the year, both internal and foreign obstacles, significant political and policy changes, particularly as a result of the historical shift of commerce and the current global trade conflicts. Malaysia's government has become unreliable. Let me continue with the effect on economic during the pandemic. Malaysia businesses have been closely interlinked with the global supply chain during the last decade. As a result, regional supply networks have grown increasingly China-centric. A substantial portion of the commerce between Malaysia and China involve intermediary goods. These intermediary goods are most impacted by global supply chain disruption. The MCO in preventing the spread of a new coronavirus in Malaysia will have serious economic consequences. Moreover, the economic policy response of Malaysia to the coronavirus pandemic consists of two separate segments. The first stage must be applied when a quarantine or partial lockdown is established in order to protect the revenue and liquidity of the firms and persons who are impacted by the situation. Apart from that, the second stage should have a significant expansionary fiscal and be put in place as soon as the outbreaks show signs of ending. Once the pandemic was over and people could move around more freely, stage 2 measures were put into place quickly. Let me prove this by using data and findings of the changes of unemployment rates of female and young workers from 2019 to 2020. The COVID-19 outbreak has had an influence on Malaysia's workforce economy. According to the Department of Statistics Malaysia, the unemployment rate soared to 4.5% in 2020 from 3.3% in 2019, or there were 711,000 mass unemployment and working hour reduction adopted by firms as cost-cutting initiatives. These effects were shown in virtual all sectors in 2020. Throughout all age categories, it has been observed that the ratio of male and female labor force participation is greater. Essentially, companies have employment tactics to reduce the number of workers, also including dismissing temporary employees, establish a volunteer separate scheme, or firing workforce. The elder individuals employee work is perhaps the most impacted in this case because redundancies may conveniently be correlated to health risk assessment, and most small firms were abruptly forced out of business during the lockdown that Malaysia enforced to prevent the virus spread. Additionally, due to the lockdown compelling important clients to remain at home, small firms were unable to sustain their relationship, which resulted in significant cost overruns. In contrast, the preponderance of foreign workers makes it challenging for domestic workers to obtain objective of the paper. Most of the eventual turn to terminate their staff in a last-ditch effort to save their companies and prevent more damages, which boosts the rate of unemployment. Now, let me continue with the effect on economic after the pandemic. Because of the illness, both our personal lives and the operation of our business were, for a small period of time, entirely turned upside and down. The purpose of Movement Control Order (MCO) in Malaysia, which has been in effect since March 18, 2020, is to prevent the pandemic from further spreading. I pen these thoughts at a period in which the community as a whole and local business were making substantially sacrifice and achieving positive result. It feels that we are now headed in the right direction as a result of these efforts. Because of the proliferation of technology as a lifeline, it is now simpler than ever before to run a number of experiments and to maintain contact with loved ones who are located back to the home. The figure shows the lagging index showed a better annual change at negative 0.5%, signifying better economic recovery ahead. For the month of April 2022, the lagging index LI showed a negative growth of 0.5%, which is an improvement from the negative growth of 1.4% recorded in March 2022. During the month, fewer applications from developers resulted in a decrease in the number of housing units approved, which in turn caused a decrease in LI. This month's LI plummeted to negative 0.5% when comparing the previous month's figure with the current one, with the number of housing units approved is negative 1.4%, the number of new company registered is negative 0.5%, and the Bursa Malaysia Industry Index is 0.5% with negative percent, and all playing significant roles in this drop is negative 0.3%. When compared to long-term trends, this smoothed LI nevertheless showed a positive trend since it was consequently higher than the longer-term trend and registered higher index points. The longer-term trend had weakened, but this didn't stop the development. Now, let me conclude this summary by making a conclusion. To begin with, COVID-19 has put a strain on a number of Malaysia's key industries. Malaysian manufacturing sector, for example, is facing a crisis in manufacturing of commodities such as oil and gas due to the global crude oil crisis, which has caused oil prices to plummet this year, in addition to material disruption caused by the MCO. Another industry that is expected to suffer the most is tourism. Travelers will be forced to postpone their trips and cancel hotel and flight reservation, which will be a huge loss for Malaysia, which was ranked the third popular Asian travel destination in 2018. As a result, the country's gross domestic product (GDP) will fall because fewer goods and services can be produced. Furthermore, an increase in unemployment as a result of employee retrenchment by some companies will reduce net income and thus GDP. COVID-19 will also have significant impact on the value of Malaysian ringgit as a result of panic selling by investors seeking to avoid trading in the current volatile market. The decline in Malaysian tourism and the drop in global crude oil prices will reduce demand for the ringgit, causing its value to fall. As of March 27, 2020, Malaysian Stock Exchange Bursa Malaysia has fallen to its lower level in 10 years, falling by striking to 20.52% since the beginning of 2020. Malaysia, of course, has developed countermeasures to prevent an economic collapse. 3 stimuli package totaling RM10 billion, RM20 billion and RM230 billion are among them. Thank you.